Welcome everybody to the first portfolio update on the eToro portfolio that many of you follow. I'm doing this because we just a month ago or so we reached over 100 copiers. So 100 people have put money in the fund. I don't know the exact amount the fund is, but to be honest, I just treat it like I did before. I don't care if it's $500,000 or 300,000. I don't care. I treat it like I treat my equity long only portfolio. We're gonna go through not every, but even the sectors of the portfolio because I have 31 positions. So we're gonna go a little bit over the ones that I've received. Oh wait, it's gonna fall. Okay, look, I'm in my terrace. Very nice. Look, so we're gonna go over the allocations per sector that I have and how I've been adapting it little by little for this new era. Of course, if it wasn't equity only long, well, almost only 99% equity portfolio, I would have added an exposure to bonds, to long duration bonds, some TLT. Maybe I'll add a little bit of TLT just because it's on 88 today, but TLT is 20 plus years US Treasury bonds. I'll make another video about what I would do if you guys have another portfolio like I do of fixed income, because you can get great yields. And if this new US administration is successful at doing what they want to do, at least partially, we will see the Fed being forced to reduce the interest, which is the short end of the yield curve. And then we'll see the 5, 8, 10, and 20 plus year part of the curve, which is the main aspect that Trump wants to lower, be lowered. So we're gonna see what you would call, if you wanna Google it, a bull flattener in the yield curve. So it's gonna be very good because when yields goes down, prices go up. So if you have high yield bonds, the spreads will go very good for you, and you can secure for years on end 6%, 7% if you do your strategy right. On dividend only, plus capitalization, capital gains, which would be another few percentage. So it's a nice strategy for these uncertain times. Anyway, I don't want to make this too long. I just wanted to come up here to my terrace and talk before we go down to my computer and we'll check the positions. I wanted to talk to you about how I see the market. Now, Trump came out with all these tariffs. There's been a lot of hype in if he calculated the reciprocal tariffs in a way or another way. Bassett has come out in CNBC and Bloomberg on a daily basis to explain. Elon Musk is in a fight on X with the economic advisor and director of the tariffs. And there's a lot of, I hate this, what they're doing, and I love what they're doing. So I think the best thing to do is to mute the noise. We still have a very solid equity market, even though it's down as well. If depends on what you buy, but it's down at least 10% at this point for most portfolios. Now we're at, I think the US has 106% tariff on the Chinese, and the Chinese have 86 tariffs on the US, and they want to prohibit the trade of 7 rare earths that are very important for this new technological world that we live in. So they're gonna have to make an agreement so that none of them gets their population and their duress, and it will get resolved eventually. Now, will it be the next week, in the next 2 weeks, in the next month? We don't know. It would be speculation. But what I know is, if you have solid, good cash flow companies, you might go down with the market, but you're not gonna suffer long term. Long term, the market always corrects itself. But for example, I checked Palantir before. We don't own Palantir in the portfolio. I love that company. If you follow the portfolio for years, we've made money with Palantir like 2 or 3 times. But then when it gets too expensive, I sell it. And until today, the PE ratio of Palantir is at 400. And I sold it when it was like 40, something like that, $40. Today it's at 76. And I don't care. It's just that when I sold it, it was already at extreme valuation. So if it was a really bear market, sell everything market, Palantir would be at a much lower PE, just to give an example. So there's a lot of good options in the market now, a lot of good opportunities to buy more of what we like. I've added some positions, we're gonna see them downstairs, mainly of what we already had. I transitioned from some sectors to another. I overweighted insurance, for example, a little bit. I like that sector. We have a very diversified in currency-wise portfolio, a lot of Swiss franc positions, a few euro positions, obviously dollar positions. So it's very diversified currency-wise because, for example, if your currency is the US dollars, all of my Swiss francs position, they went in last week. The Swiss franc was from $114 per franc to $119. So that's a nice extra income, extra gain for you on those positions. And yeah, don't pay attention. Like, I don't pay attention to the noise on a daily basis. I don't really care. I'm buying a lot on my fixed income portfolio because I think it's gonna do great. I'm gonna add some other equity positions on this eToro portfolio, and it's just a matter of time, rebalancing from time to time. If something gets a little bit higher, if Inditex, which is one of the big positions that we've done very well with in the portfolio, now it's at 44. If it goes back to 46, 47, maybe I'll sell a little bit of it to increment the position on another asset. But I'm doing this very mild adjustments because we already have a very strong portfolio. And my view is that we're gonna have a very good year, even though it's gonna be chaotic for the first 2 quarters. I think eventually Bassett, Trump, Elon obviously, but I think he's out of the administration already, or he's about to leave. They're very business-centric people. They know the stock market. It's basically a voting machine that if it gets red, it impacts the sentiment. So they need good news all across the board, especially because in 17 months, 15 months are the midterms. So he wants to get over this tariffs thing, which you may like or may not like. But the truth is, if you sell a computer in Europe, you need to pay 20% VAT to the government. If you sell a computer from Europe in the United States, if you're in a nexus state, it's either 0 or 5-6% VAT. So there's a difference in government gaining from import and exports. So maybe that will get rectified. Maybe they'll force some people to invest more and reduce their reliance on the US. You may like it or may not like it, but they have very specific goals. And if they achieve them or they see that they won't, they're going to backtrack some sort of in a way or another. Maybe not explicitly, because Trump I think he won't ever accept a defeat in any issue. But whatever happens, I think normality will prevail, especially with the Republican Party focusing on reducing waste and fraud, if there is, which I'm sure in every government there is. And what Elon is doing in the government, whether he's mildly successful, very successful, or a little successful, everything is a win for the budget of the United States. And if he lowers these bureaucratic boundaries for business, we're going to see together with lowering interest rates, we're going to see a good business movement in the United States. Now, everything is with an asterisk. If they don't pull back and these things don't go the way, even a little bit the way they want it, we might see higher inflation. We might see rates having to go even higher. We might see a recession. I think that's a possibility, but I don't think it's a big one because I don't think they will allow it. That would mean that they will reduce the administration to the next 15 months because they're going to lose the midterms. And if they lose both houses, there's nothing they can do there. And then Trump will leave the White House with a tarnished reputation, which even though if you hate him or not hate him, he doesn't want to accept it himself. Optimistic. Now, enough of my rant. Oh, and the oil is under $60 a barrel, which is deflationary, so it might improve a little bit the situation of the United States in the next weeks or months with this volatility. The implied volatility in the market is tremendous. If you do options, you have seen the prices of all the options go haywire. So if we don't do it in eToro like this, but if you have a portfolio and you want to build positions, now is the time to sell contracts, I think, but it's not advice. But yeah, let's focus on eToro. Let's go down, and we'll go over all the allocations and what we'll do in the next weeks, months. Okay, so we're back. I took longer than expected to this second part of the video, but whatever, the market has been crazy like every day this month. So I'm gonna show you this Bullaware report. You can find the link on my profile on eToro. I don't know if it's sent out to all the followers or the copiers or whatever. You can find them there. If you have any questions about a specific asset or any move that you see I make, feel free to leave them in the comments. Or now eToro allows for social links on my profile, so you can reach out to me directly on LinkedIn, X, or I think that's it. So we're gonna see this. Remember, this it's a cut at the end of March. I think we're down another 4% this month. I don't mind. We're buying great assets at these prices. So basically, last year, the last 12 months, or last year, 14.63%. The last 5 years, 210%. This is the S&P 500 as a benchmark. It's very hard to find a benchmark for a portfolio because it's multi-currency, geographically diverse, and yeah, it's very hard because we have exposure across sectors, geographies, and currencies. But it's the one that you use as an why not? Let me see if we can add VT. No, not VT. Yeah, VT, but total market and VTI's US market. I would like the VT and look this. Oh, it's even better. So VT is the Vanguard ETF that follows the market, the whole world. The VTI is only the US ETF, full market. So it's like the S&P. Basically, we've done much better than most people, most markets, most profiles, most portfolios. Okay, it's been a long day. Annualized return 28% per year in the last 5 years, and a track record as a popular investor of 4.8 years. Let's forget about this. The only thing important here is the risk score. It's 4 because I try to keep it very low. We don't do speculative stuff. Now, if you go to the fact sheet from Bullaware, you're gonna see latest trades. There's a lot of green. There's a lot of red. I was just doing some sector rotation to actually brace for this administration's roller coaster with the tariffs and all of this. So usually I don't do so many trades in 1 month, but I close a lot of stuff that some in red, some in green. Let me leave them all in green so that it looks better for me. And drawdowns, you can check all the drawdowns that I've had along the years. The big one was July 2021, but we all know what happened that year. Okay, so performance metrics, we're going to see 2 things: diversification and sector, and performance metrics. We'll start with diversification because then we'll understand why our performance metrics are very good. Don't mind me saying. So diversification, let me see, I made some notes here. Key holdings by size. Meta platforms, Facebook, Alphabet, Swiss Re, Holcim, and Microsoft are the top 5 biggest holdings that we have. Geographic and currency exposures. Let me see if I have it here. Well, you can see it here in exchanges breakdown or in countries breakdown. Obviously, US dollar is the biggest. The second biggest exposure is Switzerland with the Swiss franc, which acts as a hedge for the currency. It has done very well, and some euro, and that's about it. We have one position which is a bank in British pounds, but it's very minor. Now, Swiss franc, US dollar, Swiss franc, and euro. That's the main three. The portfolio, as you can see, is heavily tilted towards financials, making up about a third of total value. Holdings here include Swiss Re, the Swiss insurance company, reinsurance company, Blackstone, Apollo, Brookfield, the first two American, the last one Canadian, but we buy in the US dollars. There are three behemoths. I don't think I have to go into them. UBS, the biggest bank in Switzerland. Berkshire Hathaway, the king of kings for value investors, huge. They have $350 billion in treasuries right now. He made the right. He constantly makes the right choice and continues to grow the company. I'm talking about Warren Buffett. And we have Markel as well, which is like the little sister, the nano sister of Berkshire Hathaway. Small position there. And and that's it, representing a strong bet on asset managers, insurers, and alternative finance. The second largest theme is tech and communication services, which it's a giveaway because our biggest positions are Meta Platforms, Alphabet, and what's the other? And Microsoft. So these three would be included in this tech and communications. Amazon is also there, but lower in the list. The PE was too high, so I just wanted to have it. I think they still have a lot of growth in them, but either way, they're above 20% of our portfolio. And then we have industrials and materials with ABB, a Swiss robotics and industrials company, Holcim, a Swiss company of construction materials, Caterpillar, which you probably know, BASF, which you probably know, Vinova, which is real estate, the biggest owner of residential real estate in Germany. And we have Boeing, which is a special addition to our portfolio. I think I'll make my video on my thesis on that. But I think it's going to be used as a bargaining chip to improve trade deficits with the United States. I'll go over it in a video because I might be right, I might be wrong. Either way, it's very cheap. So I think it's a good addition. And let's see. We have an alternative and defensive tilt that includes Bitcoin at around 1%. I know the consensus would say that you have to have a 2%, but I have one. And TLT, which I added again, we can see here that we had it and I sold it here. Some in red, some in green, half and half. And I think because the long part of the yield curve is gonna go lower in the next few months, and the prices of these bonds will go up. And TLT is a very liquid, good ETF, so I think we're gonna keep it for around 6 months. Maybe I'll sell it early, depends on the volatility. But that's one of those that it's a defensive tilt in the portfolio. And XLU, which is utilities. I think I'll add more to that position because I really like that ETF. And lately, we've done very well with consumer staples, which are Nestle and Mondelez. They have great cash flow, and they act as a defensive asset in our portfolio. Okay, I think I covered all our initial part, the diversification, the categorization, and let's see here, dividend yield went up. And we added a little, not a little, it's a big REIT, a real estate investment trust for the big first because it's undervalued. So I think we'll have upside there. And then the dividend is at it was 6.3, but it must be around 6.7, 6.8 at this point because I added lower. So let's go to performance metrics. We have beta, Sharpe ratio, Sortino ratio, Jensen alpha. When you go to this fact sheet and you want to check the portfolio of mine or any other popular investor, they should have it on their profile, because it's a very good tool for you to see how we're doing. So any of you guys, not only the 100 plus investors in the fund, but anybody, before you invest, you should check what their performance metrics are. So here, I don't know what this score of 7.6 of 10 mean, to be honest, but these beta, omega, trainer information, Kalmar, Jensen, Sortino, and Sharp are very important. Many of them just mean the same thing. It's for every unit of risk, how much are you adding of alpha, of profit, not profit, of if the market goes up 1, how much are you going up? If the market goes down 1, how much are you going down? So basically, Jensen's alpha, which is one of the favorites, measures alpha as if the market is assumed to be responsible for 10% of the upside, and you made 9%, then you have a negative alpha. So we have a very high alpha in all time. It shrinks, but it's still far from 2. So it's 4.59. It's very in the green. So we make more than the market when it goes up, and we lose less than the market when it was down. Sortino ratio is basically the same, but it's tilted so that you have more about drawdowns. Sharp ratio is this industry standard. I think we're above 1, but if you change, before it was 0.77, which is not great, so it's improved. Beta is your response to the market, how your sensitivity to the market. 144, I don't like it. That's because it's all time and it's very hard to measure. But I pay attention to our beta, to every addition that I make to the portfolio. So if you ask me, we would be in the green. Let me see if last year, you see 129, year to date 176. I don't know how they calculate this, but well, okay, let's assume it's 144 across the 5 years. With if the beta is 144 and Jensen alpha is at 12.67, that would mean you're gonna do great, like we've done. And then I think if you go into here and you put your click on top of this question mark, you'll get a little bit of a explanation of what that is. It's more of the same, all of them, but they're very important. Like if one would be very in the red, check the reason why. So if, for example, for me, this beta is 144, so you go here, you check what it is, and it would make sense when you see the rest. And then you can go to see each asset that we have and check their exposure to the market. Okay, so I think we saw sectors, dividend exposures, and also, wait, it's been 13 minutes, so I'll cut it here. I'll try to do this every few weeks. If you have any questions, leave them in eToro or in YouTube, like I said before. And have a great day and see you soon. Bye.